Well, the severity of how fast the market went down when COVID hit, because it was obviously a major shock, and how fast it went back up, and not surprisingly, because the stimulus was so large. It was a huge combo of monetary and now fiscal stimulus, which is more potent at this time. But I'm just shocked that the market could be this stupid and think what the market is saying here is things are going to be better than ever. And I'm like, I'm sorry, that's not possible. There's certain industries we all know, travel and a lot of things that are not. Yes, we had a V-shaped recovery, I'd say in 85% of the economy, but another 15 or 20 is not going to get back to normal for a year or more. And so this is just like, what I call markets on crack. It just never fails to surprise. But this sort of overreaction, to me, means we may be finally putting in a top here. So that's what I'm looking at near term. That this extreme reaction, along with Bitcoin, on for what I call something for nothing. The economy is. Then why are we working? Why don't we just print money and spend money and never work again? First real bubble top in January of 2018. That was the first real bubble-like top. Okay. We've been doing this, crashing down, the stimulus, new high, but always a new low. The next new low is 2,100 on the S&P 500. That's 47% down. My view is that's going to end this bubble. I think that's the crash that finally is enough after so many where people finally realize, we can't just print money and get out of this mess. We're going to have to deal with it. That's my view, that we will not see a new high after this, but only if we see follow through on this, what I call this megaphone pattern, where we see another dramatic downturn. That's megaphone pattern. Again, it's just since January 18, we crash, but then we always go to a new high, a slightly new high, and then we always go to a slightly new low. And now we just hit the third new high, and that's usually the last one on a megaphone pattern. It's called an E wave. You got an A, B, C, D, E, and it did what I call a throw over. It went above the top trend line. The other ones haven't, and that is also a sign that you're in the final wave. So I think that we are about to see that next crash. And this will not take long to find out. If this is the case, we should see the market down 40, 50% within the next 2 to 3 months. So if that doesn't happen, and we don't go down too much farther here after looking like a potential peak, I think it was on February 17th, then it's like, more of the same, Fed keeps stimulating and and the market, corrects and then goes back up like nothing's happened. I don't think that's what's going to happen this time. This rally, like I said, this is the craziest rally. You will not find a rally like this in all history. And the craziest thing about it, Jay, is that it's happening at a time when the economy is so weak that it's taking gargantuan stimulus. Let me define that. I think I just put it in my newsletter. Just since the repo crisis, a little over a year ago, 1.5%, 2%. If that is not the weakest economy in history, but conversely, if the recent straight up screaming rally in the stock market isn't the stupidest, most bubbly rally in history, then I don't know what is. I may have to quit my profession if we don't get a top here soon, because this is really looking extreme to me, and this is really looking like a top, and it could extend a little bit if we don't go down soon. But I think there's a good chance that this could have been it on February 17th, and if not, I think we'll see it by May or June. Get a big bonus, okay? So everyday people may not be spending much more, but upscale people have been spending more this whole rally since 2009. This miserable 1.65% average GDP growth rate in reality has been 4 to 5 on the up end and 0 on the Homer Simpson end. So this is the reason that we're getting this reaction. But again, you cannot get a full recovery here. I mean, look, I travel for a living. I speak for a living. I cannot speak anymore except on webinars, and I do those in an hour, and I charge a fraction of the rate as if I traveled somewhere and spoke live, or go to Australia. I missed 2 Australia tours this year. That would have been a lot of money for me and a lot of travel for the travel industry, and jets and hotels are 7 times more bullish in call options than they were at the 2000 tech peak, similar to this, or the 2007 also bubble peak. 7 times. This is off the charts in every other indicator I have. So I think the dumb money is fully in, and the smart money is getting ready to say, okay, time to pull the plug. Well, smart. We already learned that lesson. Oh, we thought gold might be the safe haven, especially if the normal solution is, well, the weak economy is going to see more money printing, and we know that's going to occur, okay? But hey, the money printing is taking so much more and having so much little effect, and they saw gold fail last time. The gold would have thought it would have, because the money's not going into consumers and consumer price inflation. It's going into financial asset inflation, which is way worse when you come to the next crash. So I think this time gold, it looks like it may already be petering out ahead of stocks, which it didn't last time. And then now what we have is the final bubble, which could have just peaked. Another topic for my newsletter coming up, Bitcoin could have just peaked at 58,000, a little over 58,000, because it got overvalued for the first time. And it's hard to get bullish sentiment on Bitcoin since the people are so bullish. People who love Bitcoin think it's going to go up forever and never crash. I mean, they're in la la land. I know a bunch of them down here. Some of them are good friends. That's just the way they think. It's the great new thing, and I agree with them. But you know, the dot-coms were the great new thing and crashed like crazy too in the early 2000s. So I think that's what happens, is that if stocks start to crash and people say, after all this stimulus and the fiscal now, and the economy doesn't get that much stronger, and stocks are now crashing, which is the one thing making the bigger spenders feeling rich, I think this thing just falls apart before the vaccines really take hold. Remember, we're nowhere near herd immunity yet, nowhere near mass vaccinations. That may happen by mid to late summer. There's a long time between now and then. I think that's when we get the next stock crash. And I think the next stock crash is what finally gets people to say, oh, darn, we kind of knew it in the back of our minds, but we don't get something for nothing. How do you expect to cover over a recession and go to normal growth again when you just print money and blow your way out of it? I mean, this is going to go down, Jay. It's the stupidest, most naive thing in history, only possible to be done by academic people who've never had sex or run a business. Millennials will never, ever see a booming economy again, as the millennials in Japan already know. Bitcoin and crypto and blockchain, as much as I'm a huge fan out 10 to 20 years, I see it as like the internet on a 15, 20-year lag. They're going to crash like the dot-coms are. They're just Bitcoin and Ethereum and the crypto bubble is simply the biggest bubble coming at the end, like the dot-coms did only in the last 2 years of the first tech bubble. So they're going to crash. People are saying Bitcoin is an inflation hedge, which is not, gold is. And secondly, that it's a safe haven. It is not a safe haven bubbling like this and this volatile. Anybody thinks this is a safe haven needs to go see a psychiatrist. This past neighborhood, everybody I debate, especially go-bys, oh, the dollar's going to crash, and we're the reserve currency. No. We're at the best house in a bad neighborhood. Our demographics are stronger than any of our competitors, China, Japan, and Europe going forward. China's already declining in workforce growth for the first time in history following Japan, and Europe is just a basket case. Japan has printed way more money than us, compared to GDP, about 4 times us, and Europe's created about 50-60% more than us. And China doesn't print money, Jay. They print condos. They just build stuff for nobody, which is the worst possible thing you can do, leaving your economy with empty capacity. You know that China is now over 60% urban from 20% just decades ago, one of the fastest urbanizations in history, and they could go all the way to full urbanization, 80-85%, and never build another house or condo or building or infrastructure again, because they've overbuilt their economy out decades. How bad is that? China's going to see the worst overall devastation. Everybody's going to bubble. And since we are the most attractive stock market that still is peaking, whereas China peaked a long time ago in Japan, we will see a bigger stock crash, but we will weather this better, and we will be a better place to invest coming out of it, especially in aging baby boom industries like nursing homes, for just one extreme example. But the real boom in the future is going to go to India and Southeast Asia, because people don't realize that China and Japan and Korea, all of East Asia, is already now, except China, which has overdone it, fully urbanized and seen their great boom and will not grow rapidly again. Southeast Asia and India are the future. And in the developed world, the US and Canada are going to come out of this better than most of Europe, and certainly better than all of East Asia, China and Japan.